explain the mechanics. I guess stuff coming up for refinance with loans coming up with rates higher. What's driving this avalanche, and is there any investor opportunity here in the long term?
Great. Thanks so much for having me. I really appreciate it. Why don't we start with the macro in the office space? I mean, I think there's, you have to go by asset class but if we start with office, office has 18% vacancy and climbing. And the issue is that only about half of the workers are coming in compared to pre-COVID numbers. So the demand is down. A lot of the tech companies made a massive expansion during COVID. Now they realize they don't really need the space, so they're dumping space back on the market. You saw a lot of announcements. Facebook obviously just announced more layoffs. Google's been putting space on the market, et cetera. So you have the demand side has been very tough. So vacancy rates have been going up. There's a lot of space on for sublease. Now you couple with the fact that you have a lot of valuations that have now dropped because interest rates have gone up dramatically. And that is a real problem right now. Because you have a lot of loans coming due. This year alone, non-bank loans in commercial is about $92 billion that are coming up, and it's going to be extremely hard to refinance that in a very high-rate environment with incomes dropping on these properties. So what's happening in office in particular is the cost of keeping a tenant has gone up dramatically. In a place like New York, it's probably about $300 a square foot. So if you're an owner of a property and you have a tenant coming up for renewal, and your building is worth at or around what the mortgage is, are you really going to want to put in another $300 a foot to either keep or bring in a new tenant? And that's causing a huge problem. So you used the word avalanche. I agree with it. We're already seeing the start of that, a lot of snow coming down. There are a lot of loans already in default. Some of the most sophisticated borrowers out there, very smart investors, are starting to lose office properties. And I think that's just the tip of the iceberg.
Yeah, so it raises the question, what does this mean for REITs, especially office REITs, but also just as importantly, in a week where there's all kinds of focus and concern on the banks and the possibility of a banking crisis, what does it mean for those banks that are holding all of these commercial real estate loans?
Well, they're going to be taking them back, and then they're going to have to make a decision whether they want to put the $300 a square foot back into it, or to your point, where's the opportunity, they're going to start selling it off. But it's hard to understand where the bottom is. So we really haven't been investing in office, haven't invested in office in many years. We have under 1% allocation to office in the United States. So we've been super careful and selective in the office space. But it's going to be a real problem. And, right now, sitting since Friday, when we started to see the banking crisis emerge, most lenders aren't even quoting loans. So even if you had a loan that was coming due in a property that had substantial equity in it, you can barely get a quote right now. So now, hopefully that will be. Sorry, yep.
This reminds me, I'm a tech reporter at heart, so this reminds me of the dark fiber situation 20 years ago, and Google bought up a bunch of dark fiber, and then it was good later. Is there a dark office situation here? At what point do the prices drop so much that somebody can buy that up and wait?
It's a great point. I have to tell you, it's going to be an investor that's not in real estate who's going to do that, because right now, if you run the numbers, you'll see that the properties, a lot of them don't have really any value. Now, I want to emphasize there's a tale of two cities, because newer office product and high quality office product actually is leasing extremely well. So I don't want to throw all the office into one bucket. I also want to do it, but regionally as well, because an area like Palm Beach, some of the new buildings are getting $100 net per square foot, higher than Park Avenue rents. So I think you have to be a little careful. But when I'm talking about like a Class B office building in a New York or San Francisco or Chicago, Los Angeles, that's where it's going to be really tough. But you have to actually throw out your underwriting to do that. You would not make the numbers work, because it's really hard to underwrite where rents are in concessions. Because today, to achieve, let's say, a $70, $80 rent in New York City, you have to put $300 into the property. So when you look at that, and don't forget, $80, you have operating and taxes, $34 a foot. So net, you're making $40 a foot and put $300 in. It's really tough math right now.
All right.
So I personally think there's a lot easier ways of making money in other asset classes.
Well, we have some breaking news, but we appreciate the thoughts. Tom Shapiro, thanks for joining us.